This is Alan Bush with ADMIS. In the stock index futures, we did see a little pressure in the overnight trade. Looks like some profit taking coming in advance of the two-day FOMC meeting that does start today. Also, we did see some pressure then continuing with the consumer confidence number coming in much weaker than the estimate. Also, we are seeing a very substantial amount of public participation coming in on the long side of equity markets. In fact, by one measure, there was a record inflow of public funds into stock mutual funds and exchange traded funds in the month of January. So I think there's a bit too much bullish enthusiasm right now in the stock index futures. The risk also is that the Fed, with their two-day meeting, could hint that there could be some type of exit to their third quantitative easing plan, either at mid-year or the end of this year, or possibly in 2014. So if there is any hint of the Fed taking some of the accommodation away, that is the risk to the downside currently in stock index futures. Over in the currencies, seeing a bounce in the British pound after the pound making a 5-month low against the US dollar. Also a bit of a bounce in the Japanese yen. This after Japan announced a budget that actually was an improvement from what analysts had expected. However, we continue to feel that both the pound and the yen will continue to work lower longer term. Of course, the yen recently made a 2.5-year low. Also, as far as the pound is concerned, there is a risk that the UK could suffer a triple dip recession if the first quarter GDP comes in negative. So from here, look for lower prices in the pound and the yen, even though both currencies are a little bit higher this morning. And in the credit markets, seeing mostly an evening up trade this during the two-day Fed meeting. Longer term, we feel that the bull market is now over. Any rallies that we do see are likely to only be flight to quality rallies, and these are most likely going to be selling opportunities with what we're seeing in the Treasury futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.